Hi everyone, welcome back to Be Rich. Today I wanted to talk about Joel Greenblatt. He's a very famous investor, value investor in the US, and he made most of his money in targeting spin-offs. The reason why I'm talking about it is we recently had the Tata Technology spin-off happening where Tata Technologies removed it from Tata Motors, and it was an opportunity to highlight this. A lot of you are asking me, should you be buying Tata Technologies now? I said now the valuation's gone through the roof. So we have to be cautious on thinking about it now. You should buy value picking stocks. And the reason why I want to touch upon Greenblatt is because he's made all his money in buying spin offs. What is a spin off? A spin off is basically an XYZ company, let's say it's making 4 or 5 products. And out of the 4 or 5 products, they find out one product is doing really well and the other products are lagging behind. So they decide to increase shareholder value. It is better to split the company which is doing very lucratively in that A product and move it out and make it a separate company. And the remaining products stay in the parent company where they have 2 separate units. So you have 2 earning opportunities and 2 streams of revenue which comes and adds shareholder value. So the way to increase your income as a shareholder. So this is what spin-off is the main reason. And the positive reasons for a spin-off is it creates value for the company and it creates value for the investor, the parent company, and it's a form of leveraging one against the other and creating more cash flow for both the companies. And the negative could be it might be a strategy to offload debt. We saw Johnson and Johnson trying to move its the lawsuit which it had for the bankruptcy into another company, and there's a court case going on about it. So sometimes companies even use the spin-off for something like to move away debt, which we saw with Syntex happen in India. Another way is it doesn't align with the long-term vision. Without really having any long-term vision, they decide to chop the company into pieces. Later on to realize they shouldn't have chopped it up and they should have kept it together. This has also been there. A lot of cases historically has been there where spin-offs haven't really worked in the favor of the parent company and the shareholders. So the way spin-offs can happen is, one, the existing shareholders get, so then the spin-off company, if it's split into 2, the company A and B shareholders get value shares in both, or it can be spun off completely separately where it is launched as an IPO and the parent company shareholders have preferential shares in it. I mean, you can get preferential treatment because they're owners of the parent company. So there are lots of ways it can be structured, and it's all decided by the company, the board of directors of the company, and the regulatory body in India. That will be the SEBI. When you go and approach SEBI and say, this is what I wish to do. Some of the famous spin-offs in the world are Hewlett Packard. When they spun off in 1999, they spun off Agilent Technologies. Then Viacom spun off Viacom Incorporated. Then Expedia in 2011 spun off TripAdvisor. Then 2012, Kraft Foods Incorporated spun off Food Groups. Then, of course, 2017, very famously, eBay spun off PayPal as a separate company. PayPal was part of eBay and it was removed out of eBay and they spun it off. In India, recent ones, of course, Tata Technologies, we can talk about Tata Chemical. How did Greenblatt make money in this? Greenblatt made money on this by investing on which spin-off company. Because sometimes what happens is, he very famously talks in his book, it's called You Can Be a Stock Market Genius. That's a book. It's a very short book. I suggest you read it. It's a nice book. And in that, he talks about his deal where he made money is the Marriott hotel deal. Marriott, very famously in the US, used to own a lot of hotels, and they used to manage also properties which are not owned by them. So they had 2 divisions within Marriott Group. One was where the hotels were owned by them, the property, and they managed it. Then the other is where they were licensed to run the hotel, and they used to pay the property owner rent, and also the property owner in turn also would pay money to Marriott to manage the property. So it's a very lucrative deal. If you get into it, you can see how it's structured. This is how Sheraton was owned. Park Sheraton was run in Chennai. People who know Park Sheraton, that's why when Sheraton built their Chola Sheraton, they moved out of managing that property, and then Crown Plaza came and took over. So same way, Marriott very famously was doing this. Then the economy took a downward turn, the real estate market took a downward turn, and the Marriott family decided to spin off the Marriott into 2. So they created a sub-brand which was launched. Company was called Marriott International, while the other one was called Host Marriott. Host Marriott, because it was holding all the real estate in it and it was not running efficiently, and all the lucrative earning part of the company, which was the running of the hotels, moved into Marriott International. Most of the institutional investors let go of Host Marriott and moved all their holdings into Marriott International. Greenblatt saw an opportunity because he went through the documents and the way the deal was structured and the way it was incentivized for stakeholders. He realized holding on to Host Marriott, it wasn't performing as well as the main company. He said by holding on to this company in the long term will create value for an investor. So he moved a lot of funds and invested into Host Marriott, which was not looked on as a great company to own. But because of the inside look, studying the deal inside and going through it, he realized in the long run, over the few years, this company's its share values will double and triple. And as he expected, his shareholdings in that did grow considerably. His holdings in it grew very nicely. And he realized doing these spin-off deals and looking at these opportunities in the market can be proving very fruitful. So one method of investing is finding low value stocks, like what Ben Graham was saying. You're buying those cigar buds, looking for those. Charlie Munger has spoken about it. This is another strategy for you to look at, which is spin-offs, like what happened with Tata. So you can look at this also in Indian market. Spin-offs come quite often, quite a lot, like ITC Hotels. So keep an eye out and do go study through the documents properly and analyze it. And if you read his book, he's got his own method and formula on how you should analyze a spin-off and how you can spot where the opportunity in the spin-off is. So by doing that, you can also gain from it. I hope you enjoyed the video. I hope you found it informative and entertaining. And I'll see you in the next one soon. Thank you.
So after Kuwait, my team has decided to do an event in Trivandrum. Those who are desirous of meeting me in Trivandrum can contact our team at trivandrummp@gmail.com, the mail ID given below, or the WhatsApp number given below. My team would fill in you with the details. The event would be in January 2024. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.